All right, welcome everyone. Welcome to the Monday evening market view commentary for April 2021. For the rest of this month, this week and next week, I think I'm only doing a commentary. So we normally have Tuesday and Thursdays. I'm gonna try to give myself a little bit of time coming back. And I think I'm probably, when we start in May, I believe I'm probably only going to start, I'm only going to do a market, I don't know yet. I haven't decided how I'm going to do that trade findings and adjustments Tuesday nights and Thursdays just quite yet. So I'll work on it. But last week, the S&P rose 1.4%. We have a great first quarter on the S&P. We're talking being up like 6.8%, which is fabulous. With that said, it's kind of interesting because as I got this Q1 2021 performance and commentary, knowledge leaders funds, right? As I was going through and reading, the first thing they let me know, their number one fund was down 3.11% in the first quarter. Then they talk about annualized over the last decade, which also wasn't very good. When you work their real numbers, their fund was up less than 50% for a 10-year stretch of time. Pretty weak, right? So I don't know, compared to a negative 2.4 average over the decade, I wish they would just say, hey, portfolio growth was this. But here, Knowledge Leaders Capital is commenting on how their fund is so good, losing 3.11% over the quarter. I don't get it. For us, we were up about 5.2. If we pull in today we were down 67,000, so about 0.36 against a negative 0.53. So it's just little interesting how people compare their funds. The fact of the matter is, I basically have been taking 2 weeks off. So I will be inundating myself with a ton of reading this week. I'm going to get my taxes in this week. But that's where we're going to run. If people are to ask me, where's our market heading to? I think because we had retail sales jump 9.8%, lower initial claims, and because we're seeing the GDP going up, I think all those poor fetchers that sell in May and go away will miss a stimulus run up in our stock market. I'm not sure how far that's going to be. And it's going to be decisive amongst those companies that not only meet or beat their numbers, but more importantly, that their numbers, that their guidance is to the high side. Their guidance has to be full recovery. Here we go. I believe that's what will hold companies back. And I think that's what will also cause some companies to report really good numbers and they're just not going to move. They're not going to move because their guidance didn't wow. There was no wow factor. There's no things are going to come back, that we're going to see their business really take off. So that would be what I would expect. Kind of disappointing. Johnson & Johnson has blood clots happening with their their vaccine. And I haven't gone into it. It looks like it might only be 6 women, but that's not something you want to see from an exploratory type drug. That's not what you're looking for. You're looking for better than that, especially from Johnson & Johnson. That's all I'm going to say. Earnings, a lot of earnings coming up. We have 67 S&P 500 earnings. If we look at our core holdings, just do a little rundown here. Apple will have their earnings on 4/28 after the market closes. We have Boeing, which will have their earnings 4/28 before the market opens. All right. Baidu is estimated. It's 517 estimated. We have Disney, which is 513 after the market close. We have Ford, which is 428. Come on, Hurley. 428 after the market close. We have Coke, which is today, 419 before the market opens. We have Under Armour, 510 estimated. We have General Electric, which is 427 before the market opens. We have General Motors, which is on my birthday, 55 before the market opens. We have Costco, which is 527 after the market close. We have Facebook, which is 428 after the market close. And we have Verizon, 421 before the market opens. And we have Visa. And Visa, I cannot read my writing. We have Visa 427 confirmed after the market close. So there we go. And I'm going to change my list so I can read what I wrote on Visa. It actually looked like 21 or 29, a squash 9. All right, so there we go. Those are what we're paying attention to, where we're going to focus our earnings on. It's interesting because of that. I am struggling right now on where I would look to have some things protected. Apple, we're still running our shares. I've got 204 contracts. I've got to get on Apple. I'm really looking to do it above 135. Apple typically has a pre-earnings run. So if I was looking to Apple, right now we're really stuck with Apple. Come on, for crying out loud. We're really stuck with Apple on a pivot point. The R2 resistance pivot point, which is sitting at 134.87, closed today at 134.84. So we're close. I could make a comment on Apple as well, looking at how FinViz runs it. I could also make the comment that I'd like to see us protected if they have their earnings somewhere between 140 or their highs at 144 over the last year. So I'm just sitting back and forth trying to decide where I want to do Apple protection at. Boeing has protection on. I like where we're sitting on Boeing. Boeing's at protection at 250. We have Baidu. I asked Keith to get protection on last week. We have Baidu doing pretty well at a 215 protection. I'm really hoping Baidu has some great numbers and we see it get back up to 280. That is my expectation right now. All right, keep working our way down. Ford, I've got a bunch of Ford sitting here, 8,400 shares. I should get some protection on. Disney, 17,000 shares, 170 contracts on Disney. And I'm really leaning to Disney to do a pre-earnings run and protecting it 190, 195. Disney's not till the 13th of May. So we're doing a little bit of our fingers crossed, looking for that typical pre-earnings run on Disney. Also, if you look at Disney on FinViz, we're just at the bottom of our range. And if it breaks above that lower trend line that it's below right now, if it just breaks above that, man, we might be protecting this at 210. We have a pennant and it's breaking out to the upside. We're also building a pretty good base at 187.50. So I'm sitting back doing the best I can to be not too frustrated with Disney and giving it some time to run. That is, again, that would be my, I don't know. That would be my, man, I sure as hell hope I'm right comment when it comes to Disney. All right, what else do I have here? Already went through JP Morgan. JP Morgan and Bank of America, I'm really close to pulling protection off. And I'm going to go through that in a second on both of these. Visa, we're sitting in a covered call. Mostly sitting in a covered call. I got some shares, 2,000 shares there that I'm protecting. For some of you that were with me for a while, we're hoping to get called out in Visa at 225. That way, when we run earnings, so Visa's earnings are on the 27th, 4 days after this expires. So we'll go through a weekend. If these 900 shares get called away, we're going to run to the 225 leaps. I've got 96 contracts of leaps. It's easier to run leaps on Visa than to run the shares of stock right now. Okay. Bank of America. Beat on the earnings, looked good, didn't get the love, and it's testing the 50-day. So I'm just looking for a couple more days where they do okay. I'll take the 39.50 protection off. Same thing with JP Morgan. Really good numbers. It just hasn't moved. We're looking at 57.50 puts on JP Morgan, looking to take them off. As you can see, it's basically moving sideways, which might mean it might move sideways running into the next earnings. Probably 165 short calls would be where I would go to protect the shares. And for those of us that are in the spreads, we have plenty of time, so I'm not too worried about those at all. All righty. Where will our markets end this week? I'm going to go higher. We take a look at the Dow. We're a little overbought, but we've got earnings that'll continue to push that bullish. So I'm going to go higher this week because of that, even though we started out down right now at the beginning of the week. Same thing on the S&P, bullish, overbought. But I do think with 67 earnings, I would expect to see us continue higher. NASDAQ is not bearish, it is bullish, but it is really struggling at those all-time highs. All right, where will we end May? I'm probably going to go with 2%. And next week I'm going to do what am I going to do? I'm going to do a poll question where I'm going to have you guys tell me what you think. If you say higher, you're going against the standard sell in May, go away. Earnings, I've got a bunch of earnings in there. Really this week, IBM was a surprise. I'm going to pay attention to Netflix on Tuesday. I'm going to pay attention to Halliburton, Verizon, Las Vegas Sands on Wednesday. Thursday, AT&T is interesting. I want to look at American Airlines, Southwest Airlines. Intel will be an interesting one. Friday, Honeywell, K&B, Schlumberger, and American Express. I'm going to pay special attention and listen to the earnings call on American Express and see how they're doing. Economic reports, really slow week. Thursday is the only day that'll really move us. Internationally, I haven't even looked, so I should have looked internationally. Shame on me, right? Kevin, get back into doing your due diligence. It was so hard to wake up it was so hard just to wake up at 7 o'clock, a half hour before our market opened. I was dragging butt. All right, Monday, not much that stands out to me. Tuesday, China interest rate decision, Australia's interest rate decision, ECB lending survey. Not a whole lot that stands out to me. Wednesday, retail sales in Australia, consumer price index, Bank of Governors Bailey speech, Canada, Bank of Canada rate, nothing there. Thursday, ECB interest rate. So really Thursday, the ECB interest rate decision is important. So the ECB interest rate decision. That could and should move our markets pre-market. Friday, manufacturing, we're okay. Pretty dull week, thank goodness, coming up this week. It's going to give me time just to read and to get back on board. How am I looking to trade? We're doing earnings and adding protection where needed. Earrings, let's do earnings. Interesting article. I really am not sure if I've shown this one to you or not. Netflix and Disney are trading places. With that said, I read another article on how Netflix, even though they haven't had the earnings and subscriber growth, has gained more than Disney. Disney's only up like 43% over a year, and Netflix is up 87%. Interesting article on why FundStrat's Tom Lee explains why expects a face ripper rally in April. Hasn't happened yet. It will be earnings based. I believe I have shown this to you, but I'm showing it up again. Alibaba and Tencent are still China's benchmarks. Even as Beijing ramps up pressure, says an investor. Do feel free to read through this. And Wall Street braces for digital dollars as the next big disruptive force. I'm going to be doing more work on Coinbase and Bitcoin. I am not a fan right now at all, but that doesn't mean that I shouldn't spend my time studying it, learning more about it, especially if it could be the next disruptor that we're out there looking for. So with that said, what questions do you have? I purposely tried to make this a little shorter. I am going to milk feeling better here. Man, I went through 12 days that I was just deader than a doornail. So questions, what questions do you guys have that I can answer? Update. So rest up, Kevin. Thanks for the updates. Perfect. Thank you for hearing my voice. So William, great question. Part of the advantage of caller trading is that up days in the market, you don't have to worry so much about the market. Now, I know you're relatively new and you're like, well, do you know you're not beating the S&P right now? And I said, yes. But William, with all due respect, when we spoke, at no certain time did you say, Kevin, do you beat the S&P every month? Do you beat it every quarter? Do you beat it every half a year? You asked me about some yearly returns. And the short answer is yearly returns are kind of crap. If you're looking for an average yearly return, you're looking to get your ass handed to you. That someone's going to take advantage of what you do. What you're expecting, the answer that you want to get. What we're trying to do is double portfolios every 4.5 and 5 years. If you remember and you go back and look at the S&P over a decade period of time, it actually took 20 years for the S&P from 2000 to double up to 2020. So please don't think that averages are your friends. Please don't think that the S&P doubles every 7.7 years. Anytime you're quoted that, you're basically being quoted a line by a money manager that does not know what the hell they're doing. So my simple comment and reminder to you is if you don't want to be protected, if you want to go back to funds, have at it. You are welcome to move your money elsewhere. If you'd like some protection, someone that's going to pay attention daily, someone that knows your portfolio, that's what I'm here for. And I'll work with you as long as you'll let me. Any other questions you guys have? In fact, I should ask you, how was it with Kyiv? If a bus hits me, Kyiv takes over. I do have a couple children actually that are excited to do this for a living. Boy, one is at least 7 years out. My little girl is about 10 years out, but she's going to be amazing. That girl already, it's fun to hear her talk to people when they talk about the stock market and money options. All right, I don't see any other questions coming in. Guys, I appreciate being here. Glad to be back. I'm going to be canceling trade findings probably for Tuesday night. I will see about getting back and having myself do it on Thursday. But that's the expectation. Glad to be back with you guys. Jim Bosserman and Jim Kohler, I am going to work on getting another time set when I can get out to you. Right now, it's probably looking sometime towards the endish of May. But I will keep you two posted, partially because I really want to go fishing out there, and partially because Jim's like, you said you'd go over stuff with me, dang it, so get your butt out here. Interesting. ADP, he is lesser than you, but was fine to explain things. Okay, I listened to Bill and ADP. I'll listen to both of you. William, appreciate Keith. Good to know there's someone to talk to, but he doesn't replace you. Yes, that's what I'm talking about. I like being irreplaceable. All right, guys, have a good evening. I think I'm behind a little bit on getting some of these posted, so I'll work on that tomorrow. And really, we're just caught this week where we really don't have a whole lot on earnings, at least not on the plate. We have Coke, we have Verizon, and that's it. Next week's going to be our big earnings week with Apple, Boeing, Visa. That'll be the week that's going to move portfolios, and then we'll have a couple weeks off. Then we're going to go to Disney, Baidu. That'll be the next ones. All right, guys, take care. Pleasure being with you. Glad to be back. As of right now, I will most likely cancel tomorrow night, but I will be back on with you Thursday. And for those of you that are working, we'll get that uploaded as quickly as possible for you guys to listen to. Have a good evening. Pleasure being back. And guys, thanks for putting up with me. COVID just kicked my butt. Talk to you later. Bye-bye.